All right, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream broadcasted to both YouTube and also on Facebook as well. Okay, today it is as usual a Monday evening, 24th of February, 10:30 p.m. So thank you those who just joined. You guys are on time and early. So if you can hear me loud and clear, please say a hi to me in the comments and in the chat as well. Okay, so say hi to me. Hello, Dave. Hello, William. Hey, by the way, guys, I just want to do some testing on the audio, the mic. Right now, I'm using the automatic adjusting of the mic volume. So I just want to check with you guys. Is this louder? Is this better or no difference? If it is louder, you just type louder lah. Okay, no diff, then you just type no difference lah. Okay, cannot or no difference. Is it louder? I'm using a manual control right now, just before I kickstart. No difference. No difference. Softer. Okay. Loud. How come all different answer? One softer, one louder, and one no difference. Okay lah. Okay. In that case, no difference. Okay. Same. Okay. One last try. Before I do again. Just one last try. Okay. One last try. Let me do the audio. Okay. Is this better, louder, or no difference? Got difference or not? Mic test. Is this better, louder, no difference? Just now I was very amused by the answer, man. One is louder, one is softer, one is no difference. All different answer. Okay, right now, louder, is it? Louder, no difference. Still no difference. Hello, Haley. Any other answer? Soft. Battery is always softer. Okay, never. Okay, I think I will just stick to the automatic one. Seems like I think it's okay. Okay. All right. So I think no difference. Okay, not much difference. So don't need to waste my effort to test. Okay, I'll switch back to automatic now. I think should be no difference. Okay, thank you. I can see more response now. Okay, thank you. Okay, so battery, Cal, Jusing, Jian, okay, Darren, Henry, Gilbert. Okay, all right, thank you so much. Okay, Ingfish, Hadley. Okay, Ming Heng. All right, Zhihao. Okay, in case I miss your name, I sorry about that. Okay, I didn't scroll through. I just scroll through very quickly. Okay, thank you so much for joining me here. Okay, let me just add to the screen right now. So I'm going to enlarge the screen so it's easier for you guys to read. Okay. All right. So as usual, a disclaimer first. Whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence, okay? And yeah, and of course, do follow us, okay, MarketWise and Asia and myself on the various social media channel. So I will just post the link here. So once again, this is just one link over there. So inside this link, you will be able to find all the social media channel that we have, okay, including my personal one, okay. So for example, Facebook, Telegram, YouTube, TikTok, X, our homepage, and also the on-demand webinar over there. Unlock the secret patterns hidden in the market. It is all there. So if you haven't liked, follow, subscribe, okay, do head over, find the one that you often serve to, or best if you have everything, just follow, like, and subscribe to every single thing. Okay. All right. So let me just go back to the link over there. So once again, okay, before I continue, I just want to let you know that there is a free webinar, okay, that is coming this Wednesday. Okay, it's a live webinar. It's opportunity, risk, and disruption in Trump presidency ahead. Okay, so the speakers this time around, this is the first time I am hosting them, or MarketWise Asia is hosting them. Okay, right, it is by V, okay, founder and CIO of Track Record Trading. You might have heard of him before, but if you haven't, okay, yeah, this is the first time we are hosting him as well. And also Alex, his partner, also Alex Kozuli. He's also a professional trader. So this is 26th of Feb, 8:30. Timing is a bit different. Normally I host I do at 7:30 because right now V is actually in Europe, so he's doing a bit later. Okay, it's 8:30 p.m. So it's live on Zoom, so you can register your spot here. So once again, just show you some banner lah, okay, like this more visual. Okay, so this is V and also Alex. Okay, same name as me, Alex. Okay. So it is a live webinar. All right, he'll be sharing with you the opportunity, risk, disruption in Trump presidency ahead. So there are a few pointers that he'll go through with you guys during the webinar. So I also forgot the pointers. So let's head over to the Zoom registration page over there. Okay, so yeah, he'll be sharing with you V and Alex, the key differences between the current and the previous Trump administration. Okay, who are the likely winners and what are the market trends? What must every trading strategy have to succeed? And of course, Alex himself, again, I think he's doing a lot of Europe strategy trading as well. So we're sharing with the DEX strategy, opportunities, and trade ideas. So once again, it is by V and Alex Kozuli. So all I have to do is just to register your first name, last name, email, and phone number. The phone number is just strictly okay for SMS reminder for those residing in Singapore. We are not going to spam you for any other things. Okay. So once again, for those who just joined us, as I mentioned, there will be a live webinar this coming Wednesday, 26th of February, 8:30 Singapore time. Okay. So once again, I'll post the link in the comments. Okay. So in case somehow you can't find the link in the chat or in the comments, right? Okay, you can just head over to bit.ly/webinar 26022025. Basically, this is the date of the webinar. All right. So for me personally, I do have my on-demand webinar as well. So this on-demand webinar, it is inside this social media link as well. So once again, I just recap over there. Okay, I don't want to waste so much time on my webinar as well. So I'll just post this link over here as well. So I think tonight's session will be a pretty short one. Okay, my view remains the same, nothing much over there. All right, so let's head over to the main section right now. Really. So the economic data for this week, of course, we are towards the end of February. Time passes very fast. End of February. Okay, and next month, just a few more days, we will be into March. Then the first so-called the first term of the school will be ending soon. Okay, my girl just started in P1. Oh, so fast. Like one quarter is going to be gone already. First quarter. Okay. All right. So yep. So I think she's doing quite well. I mean that I have some good friends. Enjoying school kind of thing. Okay. Anyway, this is outside the topic. Okay. So let's head over to the Forex factory over here. Okay. So fast. March already. So this coming week, okay, there isn't much fundamental news. I can see over there, nothing much, all empty one. Okay. So from this week, only Thursday, Monday, today, Tuesday, Wednesday, nothing. And then Thursday, there's this prelim GDP, Q on Q means quarter on quarter, and then this unemployment claim. So if the market is going to have some volatility, okay, they will be on Thursday at 9:30 p.m. But of course, it doesn't mean that these 3 days doesn't have volatility. I'm just saying that by the time at 9:30 p.m., okay, there could be some market movement now, okay, because of the unemployment claim. And then on Friday, 9:30, there will be this PCE price index, the inflation data also. Okay. All right. So these are a few ones over there. So yeah. So my description for this live stream is talking about the Magnificent Seven turning into Meager 7. Okay. Because for the first part of this so-called live stream, I will talk on some of the macro things, the news, the fundamentals, okay, and the broader general market. So I'm talking about these mega cap stocks. Okay, in case you don't know, okay, the mega cap stocks, or what people like to talk about, the Magnificent Seven, the what we call the Mag 7. Okay, so in case you don't know, the Mag 7 is Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Okay. And the Magnificent Seven last year, 2024, has driven over about 50%, near 50% of the S&P return in 2024. So I'm going to show you this chart right now. So this is, I have uploaded this. So this is the Magnificent Seven, how much return, okay, they actually brought to the market, okay, the return. So this one. Okay, so you can see that this is 2024. This was last year. Okay, and the Mag 7 bring about near to 50% of the price return for equities. The Nasdaq S&P, okay, return itself is about 20+%. Okay, Nasdaq is slightly better at about 28%. You can see that last year, the US equity lead the way. The rest of the other so-called Europe, whatever so-called the emerging, Canada, all these are lagging behind. Okay, so even the small cap eco weight, basically the smaller cap, the mid cap and smaller cap are also lagging. Okay, so the MAG 7 had a significant year last year, which means that price for a lot of these stocks has ran up quite a bit. Mary, yes, there will be a recording. So in case you can't attend the webinar on Wednesday, do register for it. So we only send to those who have interest register for the event. Okay, we won't spam to everybody else. Okay, for those who didn't register for the event. Okay, Nifty, I am not too sure, but you can just check it out. Okay, from the index. Okay, which one is the index? India index. Anybody know the ticker for Nifty? Because I also don't want to spend too much time on that. Is it this one? Kotak Nifty ETF? This one cannot. Oh, this one. Sorry. This is the one. Okay, sorry. This is the one. Oh, last year Nifty. Let me take a look. India stock market, Nifty. We can just use a very quick oops. How come I cannot do? Somehow I cannot do. Don't know what happened. Is this one? Okay. Until December, maybe about 13%. Thereabout, okay? About there about 13%. Okay, I'm not so into the India, but you can just use the Nifty index, and just have an estimation what happened. So all in all, the US market, it is still leading the way, okay? So drove all the percentage and performance. Okay, the performance for the 2025, okay, this year it is actually mixed. With only 2 of the 7 magnificent 7 is outperforming the S&P 500. So if you take a look at, for example, like Nvidia right now, okay, it is actually still holding okay. The rest like Tesla, okay, it is actually not doing well. I think Microsoft is doing not doing too well also, okay. And then Nvidia just was a weekly chart. Nvidia also not doing so well. So even though there's a rebound recently now, okay. I think Meta was still doing quite well. Okay, Meta was still doing quite well until recently over here, Meta. Okay. So only 2, okay, I forget which one I do already, but this group is underperforming, okay, versus most of the asset classes this year. So once again, there's also a chart for you to have a more visual representation here. Okay, so this is for the 2025 magnificent 7 lags behind. You can see that the rest last year, a lot of these small cap, mid cap, Europe, the other country are all lagging behind the S&P and such, or the magnificent 7. This year, okay, a lot of this Europe, okay, smaller cap, mid cap are also performing better than the magnificent 7. So the total return, price return for equities for the magnificent 7, okay, it is only there about, or average about just 1%. Okay, it is still positive, but they are lagging behind the rest of the indices. Okay, clear so far? If you are clear, just type letter Y, yes, in the comments. So if you're watching this, okay, please say a hi to me in the comments. I think I didn't say hi to, did I say hi to Wailam? Okay, yeah, then I missed it now, Wailam. Okay, thanks for being here. Okay, so this is the magnificent 7 over there. Okay, just in case you don't know, okay, I'm going to share something with you here since I'm here. Okay, Did you know that there is a magnificent ETF or not? Do you know or not? Are you aware or not? There's a magnificent ETF. Okay, you know or not? If you know, okay, once again, just type yes. If you don't know, just type no in the comments. Then you have a better comparison. Okay, all right. So for those who just joined, okay, just give me a like, can not? Okay, right now there are more than 123 people in the room combining Facebook and YouTube. Okay, all right, the magnificent ETF. It was launched not too long ago. Okay, so I can tell you this is MAGS, Magnificent 7, MAGS, the 7, MAGS. So you can see this is by the issuer is Round Hill Magnificent 7 ETF over there. Okay, so once again, you can see that, even though the S&P, okay, I just go to SPX here first. S&P, okay, it is making an all-time high over there. This is the S&P. Okay, maybe I just do a naked chart over there. Okay, S&P is doing all-time high. The Magnificent, as an average Magnificent 7 ETF, okay, can you see that it is actually coming down? So that's the reason why I say that they are not actually underperforming compared to the rest of the indices and such, okay? But of course, if you wanted to trade or invest in this Magnificent 7, okay, you can use this ETF, but you need to understand what is the underlying behind this ETF, okay? So if you take a look at stockanalysis.com, or you can go to ETF.com, it's fine. So, but nowadays, I prefer to go to stockanalysis.com. You can just search for MAGS. So this is the Round Hill Magnificent 7 ETF. The asset actually is not too bad, okay? The AUM is above 1 billion, so it's still okay, okay? All right, you don't compare to against to S&P and all this, but for ETF above 1B is still okay. Okay, asset class, okay, 1 billion. The key thing I want you to focus is on this, okay? This is something for you to learn extra only, okay? What's the underlying? So you can see this is the issue around here, okay? So this fund, it is, okay, of course, like Magnificent 7, they invest in Magnificent 7, invest in stocks based on this particular theme, okay? Let me try to zoom in, can see or not, okay? Particular theme over there, all right. This fund is actively managed fund, offers highly concentrated exposure to the tech stock. Of course, it's Magnificent 7, M7, right? Okay. So the key thing is this one. All right, I want to show this. The fund is invested primarily through swaps and forwards. This is the key things. Invest primarily through swaps and forwards, which means that this Round Hill issuer, okay, the ETF issuer, does not, okay, buy the Magnificent stocks directly. Okay, for example, Nvidia, Tesla, Microsoft, Amazon, okay, they do not buy the actual stock directly. So instead, they do it via swaps. Okay, do you know what does this means or not? What does this means or not? Okay, yes or no? If yes, type yes. If no, type no. Okay, I'm expecting more answer to be no lah. Okay, then I can explain correct? Then I can explain correct? So yeah, I know, right? I believe no lah. Okay, swaps basically is a agreement between different parties, two parties. Okay, I repeat, a swap is basically agreement between two parties. So basically, okay, Round Hill, okay, is having an agreement with a counterparty. This counterparty can be a bank, financial institution, whatever. Okay. So which means that this counterparty, okay, make an agreement. Say, okay, counterparty. Let's call him. Let's assume that it is JP Morgan Bank. Okay, JP Morgan Bank. Okay, JP Morgan Bank. Okay, I want you to promise me that you give me the return of the Magnificent 7 return. So if Magnificent 7 they goes up by 10%, okay, you have to provide me the 10% return. If Magnificent go down by 20%, you have to manage also give me the 20% return. If it go down by 10%, same. You also have to give me the minus 10% return. Okay. In order for me, okay, to get all this return because I go through you, okay, I will just pay you a fixed fee, for example, 1 million per year, that kind of thing. So they don't invest directly into the stock, but ask a counterparty. For example, maybe it could be JP Morgan. For example, only JP Morgan say, okay, I will give you the return. I will do exactly the return for you. In exchange, okay, you just give me like a fixed fee every year. I do this for you and I get 1 million for you every year. Simple as that. So then I get the return. Okay. So most likely the JP Morgan, the counterparty, will invest directly into the magnificent stock itself to hedge their position, okay? And they just give the exact return to Round Hill. So which means that Round Hill get the return exactly from counterparty without having invest directly into the Magnificent Seven stocks, okay? I don't know whether my explanation is good enough or not because I just explained on the fly like that, okay? I hope you can understand. Basically, they are getting return from a counterparty, so they do not exactly invest directly into the Magnificent Seven stocks. Okay, so the counterparty have to provide the return now. So if the MAG 7 give 10% return, the counterparty banks will have to give 10% return. If the Magnificent give 20% return, the counterparty have to give Round Hill, the issuer, a 20% return. Okay, so if you ask me whether this is a vanilla stock or a kind of a derivative, I also don't know how to explain. I think it's not a vanilla, okay, but somewhat between a vanilla ETF and also a derivative ETF. Okay, but do you understand what I'm trying to say or not? Okay, if understand, once again, okay, just type yes. Can understand or not? Okay, but I think the risk is not that high lah. I mean, I think still okay lah. Okay, there's still quite a lot of liquidity there because this is what the Magnificent 7 it is doing now. Okay, clear? Or are you guys lost already? Oh, the market today go down. Fantastic, fantastic, baby. Okay, so yeah, all right. So this is clear. Only Hadley understand. If the rest understand something, you find value in this, you learn something new, you know about this Magnificent 7 ETF the first time. At least give me some like, can or not? Okay. Right now, I think about 130 people in the room. Okay, for now, only about 12 likes only. Okay, liking is free, doesn't cost you money, but it can really help me to bring across this live stream to a lot more people. So if you don't want to share, at least give me some likes, can or not? Can? Can All right, thank you so much. So this is the Magnificent 7. So my take. So this is my personal view there. So because as I mentioned, last year it had an amazing return near to 50% on this Magnificent 7. Okay. So so for the past, I think 2 years or so, it surged about 150% return. Okay. All right, since the bear market ended in 2022 into 2023. Okay. So the mega cap stocks right now, it is remaining vulnerable. Okay. Could be. So I don't know what is the rest of the investment they do what lah. Okay, so I never really delve deeper. So if you really want to invest in this, then I think you have to delve deeper in that lah. Okay, but I don't know what are they investing so much into the treasury bill stocks. Maybe they have excess money, they do not want to invest so much in it. That kind of thing I don't know. But you have to do a deeper search. But I'm just sharing with you, there's this Magnificent 7 stocks. So I think this is not a plain vanilla ETF where they invest directly into the stock itself, but using derivative using a counterparty. So there might be some risk involved. Okay. All right. So yeah. So so back to the mega cap stocks. So there's some vulnerable return. So but just for price purposes to see the stocks, right? Okay. This ETF is good to see how the MAG 7 is performing because they are not doing very well. See, in fact, today it is also coming down already, the Magnificent 7. So with that case, I know that the 7 stocks are all coming down today, most likely. Okay, all right. So the valuation right now, okay, for the S&P, okay, is stretched, but not as extreme during the 1999 tech bubble, okay, because last time there was no earnings. But this time around, okay, in this era, there is real earnings. All these tech stocks are making money. So there are a few places where you can see this P ratio of the S&P 500. So the one that I know of is this multiple. Okay, the domain is a little bit different, but I call it multiple.com. So it's MULTPL, multiple. I posted in the channel. So this is S&P ratio, okay? Of course, this is during the 2008, 2009, that kind of level. But you can see that the dot-com crisis, okay, dot-com bubble, the P ratio is also about 45, okay? Right now, we are not at exactly at the low here, but a bit higher, okay? But still lower than during the COVID, during the bull market in 2020. Okay, so right now it's about 30.09. Okay, so this is from the multiple.com over there. So if you actually search for S&P 500, okay, PE ratio, there are actually a few sites there where you can take a look, okay? So Guru Focus is one of them. So you can go to Guru Focus over there, okay? So this is also pretty much similar to the multiple.com over there, okay? All right, but see 30.02, it is the same as well. But I feel that this multiple.com, it is easier to see and visualize that. Another one I can find is actually this World P ratio, okay? So also a bit difficult to read in case you want to know, okay? You can find that over there, okay? Yeah, so not the easy, and a lot of ads. So personally, I prefer to just use this site to have a general gauge of what is the P ratio of the S&P 500. So there are some other things, okay? What is the S&P dividend yield? Okay, what is the historical price? Okay, what is the Shiller P ratio? Okay, all this you can go and explore yourself. There's a lot more. There's a lot more. Even the US economic data, they also have a consumer price index, the inflation data. Okay, this is based on the, how many table. Okay, currency. But this is cumulative one. This is cumulative one. Okay, all right. There's also other things, a lot more, okay? So you can just go and check it out yourself, okay? Clear? I think maybe some of you might know, but maybe some of you might not know. So once again, I will just share this link in the chat over here. Okay? All right. So like I mentioned, right, earning growth, it is more balanced right now. So in fact, even though the Magnificent Seven, it is coming down, but you know, there are other stocks that are so-called sectors that are making so-called performing better. Okay, so earning growth not only just concentrated into the tech also, but both into the tech and non-tech. Okay, so the market is actually broadening overall for the past 1 year or so lah. Okay, and so far, okay, so far 10 out of the 11 S&P sector are positive. Okay, with financial, energy, healthcare outperforming, while tech and consumer discretionary are lagging. So once again, just a visual chart for you to take a look over there. So you can see over here from this chart, I will just open in a new tab. Okay, this you can see that recently, energy, healthcare, comms are the better performing. So you can see all of them are actually doing quite okay. So that is what I meant by the broadening of the sector leadership. Okay, the tech, we are very used to tech. Okay, outperforming. Well, like tech is the best thing. Okay, there's nothing to have a better performance than tech for the past few years, like since 2020, 2021, 2022, that kind of thing, right? Okay, but only one is underperforming or negative returns. So this is a visualization. But if you want to find the real-time data, once again, you can also go to finviz.com, okay, under the groups over here. Okay, so all these are already classified, arranged into sector. So you can take a look at the year-to-date performance. Okay, in fact, all of them are positive. Only right now, consumer cyclical, it is negative 0.46, just slightly negative. The rest of the sectors are still positive as of now over there. Okay, so last week I talked about the European so-called the equities. Okay, European IEV, if I'm not mistaken, is IEV. So basically, the European stocks are outperforming the US in the early 2025. So this is the top 50 Euro stocks. 50 are the top 50 Euro companies. It's like the Dow Jones are the top Europe companies. Okay, it is actually up about 13%. Okay, right, beating the S&P, which is about 4%. Okay, and also the MSCI World Index. Okay, so the Euro stocks. Okay, they have also ETF that is called the FEZ. over there, FEZ, okay? No, not FEX, FEZ, okay? The Euro Stocks 50 ETF over there, okay? Of course, today a big some correction, but overall, you can see that it just went up all the way, outperforming the S&P 500. So this is FEZ. In case you want to know, this is the Euro Stocks 50. Okay. So this is a reversal from the 2024 where the Europe underperformed the US. Okay, last year, you know, Euro was underperformed. Okay, last year S&P was performing extremely well. So typically, you know, you can see that it's like country rotation. Some doesn't mean that, you know, those who are performing very badly will continue to perform. At one point in time, okay, the rod, the decline will stop and then they will so-called reverse. And this is the year it seems like, you know, the Europe, it is performing better than the US counterparts. Okay, so our take, so-called, or my take is that, you know, the weaker, it seems like the weaker US dollar, it is so-called boosting the international stocks and sentiment. And I find that recently there's a correlationship between the US dollar and also the so-called the Euro stocks. Okay, so it is inversely correlated. So if we take a look at the FEZ over there, so if I take a look at the line chart, so the blue line here is the Euro stocks, okay? And then if I add in the DXY, this is the dollar index over there. Okay, so can you see that, you know, when the dollar index is going higher, okay, the Euro stocks are going down. Okay, when this one it is coming down over there, okay, then the dollar index, the Euro dollar index is coming down, then the Euro stocks are going higher. That kind of thing. So it kind of like recently there's inverse relationship. Once again, this is over here when the dollar index is heading higher, the Euro stocks are coming down. Okay, so right now, the dollar index, it is actually recently coming down, right? So this is the reason why that the Euro stocks are actually going higher. So right now there is this inversely correlationship. So it doesn't mean that it's going to stay like this all the time, okay? But this is what I discovered recently, okay? All right. So of course it is based on the weaker US dollars, okay, boosting the European stocks as well. So not only that, because based on so-called the fundamentals and such, okay, there are more positive economic surprises from the Eurozone compared to the US. So this is also a data that I found. Okay, so seems like the Euro country have a lot more positive data compared to the US over there. So this is this visualization. Okay, positive economic surprise have outpaced the US this year. So take a look at over here. Okay, all right. So the blue, the blue one, it is the Euro. So it has been going higher, and the golden one, it is actually the US stocks. Okay, so the not so favorable news and such. So maybe okay, this is the reason why this is also boosting the Euro stock market as well. But personally, I don't think this is the main reason. I just think that it is because, you know, at some point in time, okay, it cannot just keep going down further and further and further. Right? At some point in time, when it is really oversold, okay, when it is really oversold, so for example, it has to reverse. It has to reverse. Okay, so you know, if you take a look at the naked chart, okay, let's take a look at FEZ. Okay, at some point in time, okay, when it is so bad, okay, it has to reverse, okay, it has to reverse. Okay, this is typical of so-called TA, okay, oversold, overbought. Any questions so far? Any questions so far? Any questions so far? Oh, the fantastic. Okay, the IWM. Okay, hey, still no funding insiders, not too bad, so-called I believe there are quite a few here, okay. So my view is correct, okay, just that I was a bit early, okay, about 1 to 2 weeks time, okay. So right now the selling started to come, okay, and yeah, previously I also got stopped out from the S&P 500, so I shorted a little bit too early. So in fact, I mentioned this in the seasonal vantage insiders over here. Is it under the chat corner over there? Where did I put the news? Okay, yeah. So so I said that I've been bearish for the past 2 weeks over there. Haven't been looking to long stocks in the latest video update, just that I was a little bit too early and the market keep chopping around. So in fact, last Friday, okay, you can see that 21st of February, I shorted the IWM. This is the Russell 2000 ETF at 223.14. I shorted at 223.14. So I said that I did another sell short on the Russell 2000, almost 1.5 R now. So, but I say that, the market is still very volatile. We should see Monday how the market react. So 223.14, let's take a look. Okay, IWM, since I'm doing quite okay. What was the data? 223.14. 223.14. Okay, so I shorted over here. I shorted over there. So I think right now, most likely have, oops, okay. Yeah, so, okay, so most likely more than 2R already. So because I think that there's more downside to go, so I did not take profit at 1.5R because once I catch it, okay, I want to really, to get back what I've lost, okay? Yeah, so I'm still holding on to it. Any questions so far? Okay, so, yeah, I think for those seasonal vantage insiders, okay, this will be a good one. Once again, for those who haven't joined SVI, I actually shared a roadmap since last year. So far, the roadmap, it is almost there. Not exactly, okay, but it gives us a perspective of what could happen, okay, in the coming months. So far, it has been pretty spot on for gold, for Hang Seng, for the S&P, okay. Any questions so far? So if you want to know more about this SGI for those who haven't joined, okay, you might want to head over to this link over here. This is actually our social media link. So once over there, okay, at the end of the link over there, you can find this webinar, Unlock the Secrets Pattern Hidden in the Market. Okay, head over to this webinar. Okay, this is on-demand webinar, and then you can just watch the webinar at your own pace, own time. Okay. Let's click over to the market right now. Okay, so let's see the S&P 500. Okay, the zero gamma level no change. Zero gamma level no change. Let me just remove all this. Too many things already. Zero gamma level no change at 6,100. So if you go to spot gamma, the spot gamma exposure over here. Okay, once I always use this as a gauge over there. So this is the how come it's not loading? Okay, over here. Okay, so they're at about 6,001 level. So the options dealer, their position between the net positive gamma and net negative gamma, it is at about 6,001 level. So if price is below 6,001, then there could be more downside to go. Okay, there could be more downside to go. So in fact, you can see that, the Russell 2000 was actually the weaker one previously. So previously, okay, not only I added in my usual cloud indicator, it was the weaker one. You can see that it is actually below the CPR and such. Okay, of course, right now we are actually touching the swing low over there. There will be some reaction over there. Okay, if I add in the yearly one, so right now we are actually below the yearly CPR, there. So previously, at the start of the year, it was like going to hit into a downtrend, but luckily it hit back up above the yearly CPR, the yearly pivot point. You can see that typically the yearly will be acting as a very strong support and resistance area over there. You can see this was last year, the yearly CPR. Okay, you can see that it just keep hovering above the yearly. You see over here, yearly pivot point, upper range of the yearly pivot, and just keep hovering prior to that, 2022, you can see that once price has broken below the yearly, this is like officially confirmed downtrend, okay, for the Russell 2000, that kind of thing, okay. And then when price hit back against the yearly CPR, it is acting as a support, acting as a resistance area over there, okay. So right now, as of now, not so good now in a way that price it is below the yearly CPR. So I am a little bit cautious, okay. But of course, okay, I'm not saying that from now until end of the year, the markets will crash all the way up. I am not saying that. I'm not saying that. Okay, right now, seasonally, based on the seasonal period, okay, and based on the post-election seasonal period, from now typically until maybe late March or early April, that kind of thing. I won't tell the exact date, okay, only reserved for my SVI. Based on the roadmap, you can see roughly what is the date, okay. There could be more downside to go. There could be more downside to go also. Clear so far, no? Clear so far. So this is my bias. It doesn't mean that I'm right, but I feel that, the market has been chopping around, not the easiest to trade, but, which means that, market is not the strongest, okay, and there could be some downside, even if the market don't really go down a lot more, basically just chop around. To me, it is also the market is weak. It's weak to me. So in order for it to be the better time to enter into the market for S&P or whatsoever, right? Okay, it will be somewhere around late March to April, so that kind of period over there, late March to April. So right now, the market could continue to chop around or maybe even go down further. This is my personal opinion. Clear so far? If you are clear, just type letter C in the comments. Type letter C in the comments. Okay. Of course, not every single trade is a winning trade. So previously I talked about the Palladium. So this was a losing trade as well. So it doesn't work out eventually. So it had some bounce over there, but it didn't work out. So I get stopped out on this as well. So yeah, not every single trade is a winning trade, but like what I mentioned to SVI members and always focus on the reward to risk ratio lah. Okay, that will be a better one. So you do have to win every single trade. Okay. MSTR. So Kenny from what's this? Phil. This is a bearish data. So he got a 1.5R reward ratio. MSTR. So good job, Kenny. MSTR. I'm not sure whether you're watching this or not. Okay, so MSTR, okay, so it's coming down. So MSTR, you can see that previously also a very good hype on all this stuff that eventually come down. So you can see that this is the yearly CPR. If really price do break below the yearly CPR, then it is not boding well for MicroStrategy. Okay. Yeah, so previously you can see that after that it is above the yearly CPR. Okay, it just hover above the yearly CPR and such. Okay. All right. So any questions so far? Any questions so far? Okay. And I also want to share with you on this gold also on gold. How many of you are very bullish on gold right now? Are you bullish on gold? Okay. If you are bullish on gold, okay, just type gold here. If you are not bullish on gold, just type no. Okay, I just want to know the sentiment. Okay, recently there's a lot of news on gold, especially gold lah. Okay, the rest of the precious metals not so much. It is mainly hinging on gold. So Hadley is bullish on gold. Christopher is bullish on gold. Wiki, it is bullish on gold. So the rest, not bullish or no idea. Just a quick sentiment. Are you bullish or not? If you're bullish, just type go. Okay, not bullish, okay, just type no. Okay. Wow, Mary also bullish. Gilbert also bullish. So quite a number of you guys bullish. Wylam is neutral. Okay. Feng Rui is bullish on gold. Okay, but I just want you guys to Only one Chai Seng is not bullish on gold. Huh? I have lived through, not saying that I'm very old, okay. I went through the 2011 gold craze and also the 2020 silver craze as well. Okay, I'm not sure whether you guys can remember. Okay, anyway, before I go into that, okay, PLE waiting for it to draw. Henry saying no. Okay, quite a number of are quite bullish, okay. But for me personally, I am a little bit cautious, and in fact, I have actually starting my sell short on gold already. Okay, so there are a few reasons. One of the reasons is because it is based on the seasonal period also, because right now it is right now here it is the starting of the bearish period. Okay, it does again tell that it doesn't mean that gold is going to crash. Okay, it doesn't mean that gold is going to crash. It could be have a shallow pullback, okay, or it could have a steeper pullback, okay, or the weakness could be just keep ranging like that, okay, it wear you out, okay, it could be like that. Okay? I'm not saying that it will crash. Don't be mistaken. Say that, oh, Alex say that weakness, okay, it's going to crash. No, I did not say that. I repeat, I did not freaking say that. Okay, but okay, I think that gold might be a little bit toppish, okay, even though it can continue to go higher. Can it go higher? It can go higher. Of course, it is possible, okay. It's just that I think the reward to risk ratio, it is not in our favor. It is getting a little bit more risky, because if you take a look at the gold right now, which I mentioned to my SVI today also, if you take a look at the news, okay, the news over there, okay, you can see that, all-time peak now, gold continue to look very strong now. Recently, they say that there's a lack of demand of physical gold, and the US, Elon Musk and Trump is going to like check the gold inventory or what lah. So Singapore export a lot of gold to the US lah. Then China insurer analyst said that, wow, gold will drive above 3,000 US dollars, okay. Then you can see the gold supplier face unprecedented demand, okay, as large investors flock to the precious metal, okay. Sound very bullish, right? If you are maybe a newbie or something, wow, like what, that really very bullish, should buy some gold and keep it for safekeeping then, okay. I mean that if your mentality, okay, is maybe about 1 to 5 years, that kind of thing, right? Sure. I mean that you can go ahead, okay. Gold can continue to go higher, no problem, okay. But if you're talking about, okay, short-term trading, I repeat, short-term could be a few days to a few weeks, or to maybe 1 or 2 months, that kind of thing. Maybe just 1 or 2 months, okay. Short-term. Can we have a common definition that short-term is about 1 to 2 months, that kind of thing? Okay, can or not? Definition. I'm not saying long-term cannot go up. I'm saying that short-term right now can. Okay, if you okay with that, we agree with the definition. And later say that, hey, Alex said that gold is going to be very bearish. That kind of thing. I did not say that. I'm just saying that short-term, it could be a little bit bearish. You need to be a little bit careful. Okay, so I think that short-term wise, there could be some weakness or downside to go down. Okay, how high or how low, I don't know, but I think that there is some downside to go, because as I mentioned, okay, I have lived through. Okay, I'll go through naked chart. Okay, I went through the 2011 was the time when I first entered into the e-market. Okay, 2011. Wow, people are talking about have been going higher already, and then suddenly towards 2011, people say, "Wow, go! Everything also go. You surpass $2,000. You will surpass $2,000. That kind of thing. Gold is sure to surpass $2,000. I think I mentioned last year also, right? Okay, the story is similar also. Okay, gold did not hit $2,000. Gold did not hit $2,000, and about 1,009. Okay, price just so-called cannot go higher, and then just go down all the way for a number of years of so-called bear market. Okay, again, I'm not saying that gold it is going to be like that. It can just have a shorter pullback and then continue higher, but I think short-term wise there could be some correction, because the sentiment, the news that you see right now in all this media, it is exactly the same like 2011, exactly the same. Okay, this is based on my experience. Okay, exactly the same. People are telling you how bullish gold is. Okay, those who have bought have all bought. Okay, all right. Then if everybody have bought, then who is going to push it higher? Okay, if you want to buy, okay, if you want to buy, somebody need to sell to you. You get what I'm trying to say now? If everybody want to buy, okay, somebody else has to sell to you. Who is that somebody else? You have to think about that, okay? You are the liquidity provider to these big boys out there, okay? I repeat, you are the liquidity to those big boys out there. For these big boys, the smart money to dump, to unload this gold, whatever thing is, okay? They need the retail to buy from them, okay? So this is exactly what happened in 2011, okay? So once again, same for the silver as well. When during the COVID, I think it's during the COVID, okay? They said that it is going to hit a lot higher, that kind of thing, okay? But eventually hit at some point in time, it just crashed. So people are very bullish on silver that can hit go higher. Don't know what price, I forgot already, okay? 2020, no, not 2011, it's 20, sorry, it is 2020, 2020, sorry, 2020, forget, this is a weekly chart. 2020, I'm not sure about you, during the time, there's some Reddit posting, saying that, wow, there's some short squeeze on the gold, or the gold, not gold, silver is sure going to go higher. Short squeeze, okay, trust me, okay, a lot of people are bullish on silver. It can go to $50, that kind of thing. They take reference to the all-time high at 50. They say, oh, somebody is going to corner the market or whatever thing is it is, okay? They're very bullish on silver. So all the news, the media, all talk about silver. So what happened on silver? Yes, it did go higher, but it stopped at 30. Okay. So where is the $50? So if you think that it is going to go 50, you hold on to it, okay, you are being trapped already. Okay. Again, I'm not saying that silver cannot continue to go to 50. Yes, eventually, price to recover, maybe can continue to go higher, but you are trapped for a long time. So this is exactly the same in 2020 during COVID. Okay, the sentiment was extremely bullish on silver as well. You get what I'm trying to say? Okay, again, this is just based on my experience in the past two bull and bear cycle on gold and silver. So for gold this time, okay, is it different? Is this time different? You ask yourself, is this time different? Maybe this time could be different, but I would want to rely on my experience to draw experience from my past 13 years. And I would say that right now it is not the best time to buy into gold. Even if gold can continue to go higher right now and chunk all the way higher, I would let it be, let it go, and I will trade other things, because personally I feel that the risk is a lot higher right now on gold. Okay, I can potentially lose a lot of money compared to potentially I could make a lot of money. You get what I'm trying to say? All right. People always have this mentality that gold come down to cause the USD to spike up. Not necessarily, not necessarily. This is a textbook example only. They like to say this all the time, but not always. So the correlation, it is not fixed one. So I don't go through the correlationship again, but you can go and check it out. Not always, it is always like that. Okay, all right. I did not really observe with the crypto, so I did not really observe that. Do you have any insights correlationship with crypto? Not that I'm aware of. I did not really have an in-depth study on crypto versus gold. Okay, clear so far? So far or not? All right. If you find something interesting, you find value in this, okay, just type me in the comments now. Okay. Well, at this point in time, once again, there are more than 150 people combined Facebook, YouTube. Okay, can you give me some like or share or not? Can or not? Okay. Give me some like, give me some share. Once again, I'm not saying that gold will crash. I'm saying that it is a bit risky to buy now. Short term. Okay. Any questions so far? Any questions so far? Okay, so before that, just for those who just joined, just want to let you guys know that this coming Wednesday, 26th of February, okay, there will be a live webinar, not by me. This is by V and also Alex Kozulin from the founder of Track Record Trading and a professional trader, Alex, okay. They'll be sharing with you the opportunities, risk, and disruption in Trump presidency ahead. So it is on 8:30. So you can register your spot right now. So this is the first time we are hosting these two speakers and traders from Track Record. Okay, so this is what they are going to share. This is going to be a Zoom webinar. Okay, so the few key pointers they're going to share is the key differences between the current and the previous Trump administration. Who are the likely winners and what are the market trends? Okay, and what must every trading strategy have to succeed? And Alex Kozulin is he trade a lot of DEX lah, so he'll share with you some of the opportunities and trade ideas in the DEX market, and of course in the Nasdaq as well lah. So yep, so by V and Kozulin, Alex Kozulin from Track Record. Okay, so it is free. So 8:30 p.m. Just let you know, it is 8:30 p.m. Typically, I start at 7:30 for my own personal webinar, but because V is staying at Europe right now, so he's starting a little bit later at 8:30 p.m. So if you want to register for this webinar, do register for it. Okay, like what Mary just now said, okay, it is recorded, okay, but we will only send the replay to those who register for the webinar. So if you did not register, I'm not going to send to you, okay? I'm not going to spam you, okay? Only those who are keen, who are interested, then I will send you the replay. Even if you can't attend live, do register. All right. Any question so far? Any question? Recently, like no question, huh? Okay, but anyway, I've mainly covered. Okay, so my personal view is that the S&P, I think there could be some more downside to go lah. Okay, weakness maybe until March or April. So the exact date, I won't say lah. So mainly for the SVI members. Okay. So once again, if you are keen to learn how seasonal trend can help you anticipate, okay, trends and let you know how to trade like my members out there. So these are the member success over there. Okay, so all these are recent. Just now, just posted. John posted. This is what IWM. He also traded IWM. Okay, and although MSTR from Kenny lah. So we can actually head over to the social media link over there. Okay, link tree. I'll post the link over there. Okay, under at the bottom, this webinar, on demand webinar, they unlock the secret patterns hidden in the market. Okay, and then you just register your details and you are good to go. All right, so I see that there are actually no questions. So just nice, it is the 1 hour mark or so. Okay, so yeah, if you enjoy my sharing today, help me to like, share, and comment. Just liking, I really appreciate that also. Okay, just like the Facebook and YouTube. If you're watching this on YouTube, do subscribe to our YouTube channel. And if you enjoyed this session, okay, if you find value, okay, just type letter V or value in the comments now. Okay. All right. So I really appreciate that you stay with me until now. So with that, thank you so much for staying with me, and I will see you guys again next week. Okay. With that, thank you and bye bye.